Hi everyone, welcome to today's video. So on today's video, we are going to understand what will happen to your portfolio when Nifty hits 25,000 mark. Now, many of you would say, Akshat, you have gone crazy because right now there is so much volatility in the market. Market fell to 17,000, then it came back up to 18,200 and it is dancing around here and there. And you're talking about Nifty 25,000. So hear me out. This is a really good macro video. It will help you plan your portfolio sensibly and it will make you confident as to why you should be investing in the stock market right now. So I've divided this video into three specific parts. One, I will give you economic rationale and explanation as to why the market will go up. That's one. Second, I will help you break down what will happen to some of the leading stocks in Nifty 50. I'll give you some commentary around it. And finally, I will give you 6 specific type of stocks that are likely to contribute from this rally from 18,000 Nifty 50, where we are standing right now, to 25,000. These 6 type of stocks are likely to contribute the most to the Nifty's rally from 18,000 to 25,000. So please watch the sections that are relevant for you, and I would deeply appreciate if you could hit the like button. That would allow this video to reach out to more people. So let's get the video started, and let me first and foremost speak about why we will hit Nifty 25,000. Now, people who are extremely new to the stock market, just a very quick introduction to what Nifty 50 is. Nifty 50 is the collection of biggest 50 firms in India, and that index is called as Nifty 50. So this is the index and it is called as Nifty 50 index, and you can track it, and generally this is called the market in India. When you read the news that hey, market has gone up, it simply means that Nifty or Sensex have gone up. Similarly, if they say that market has gone down, it simply means that Nifty 50 or Sensex has gone down. So let us quickly understand why the Nifty 50 is likely to go to 25,000. And one of the best ways to approximate the future is to look at the history. This was a quote, I think it was given by Winston Churchill. So do tell me in the comment box who made that quote. That's a very interesting and thoughtful quote. So all of us should remember that. So let us look at the history of Nifty in the last 8-9 years approximately, and let's try to approximate what is happening with Nifty. So if we consider the situation from 2013 onwards, Nifty has given approximately 200% return, which is awesome. So that is point one. Now, if you observe this journey very closely, you will see a large periods where Nifty has just moved around in a sideways manner. So for example, if you would have invested 100 rupees in 2015 in Nifty, it would have roughly become 90 rupees. So you would have taken a 10 rupee loss in 2 years, right? So these type of periods also happen in the Nifty, and this is called a sideways market, right? So sideways market. And when the Nifty has given a major uprun, for example, right now Nifty has given a major uprun, and it is likely that another situation like this might happen where the market might go sideways. Now you'll say, Akshat, you started the story by speaking about, hey, Nifty is going to hit 25,000 and now you're giving negative news. I want to systematically drive home the point. In the long-term perspective, the markets are going to go up. Yes, in the short term, right? In the short term, there will be sideways market where you will not make money if you are especially a Nifty investor only. So let me delve deeper into these points and let me give you rationale around it. But the key message that I want to drive home from this conversation is that please don't be afraid in terms of investing in Nifty, because you just need to invest in good things. Because even if you would have invested here and for 2 years period, you would have not made any returns, in fact 10% loss, then also you would have made a lot of returns if you would have simply held your stocks. So you need to operate in the stock market with the attitude of an optimist. That is extremely important. Now, let me give you some systematic reasons as to why the Nifty will go to 25,000. Now, if we do the math, roughly the Nifty will have to go from 18,000 to 25,000. What is the percentage gain we are looking at? So roughly we are looking at a 35-40% rise in Nifty. This is not unprecedented. It will definitely happen. Now, why will that happen? Let me give you some systematic reasons. The first reason is the economic reason. And here you need to understand the concept of price stickiness. Now, what is meant by price stickiness? Let me illustrate that point by giving you a very specific example of Hindustan Unilever products. You might have read the news, and I'm flashing it here, that HUL recently has decided that it will increase its product prices by roughly 15 to 20%. Now, that is a very big price rise for things like shampoo, soap, which HUL deals in. And the rationale why they have done that is that they are saying that, you know what, we are living in a very high inflation environment. So the suppliers who are giving us all their material to manufacture this shampoo, that cost itself has gone up. So we have to increase the prices of our product. Now, do you really think that this inflation is going to continue forever? The answer is no. It will come down at some stage. And comment this below. I will really love to read it. That HUL will roll back their prices. They will say that, you know what, now inflation is gone. Now let us roll back our prices. That 15-20% price rise, we will roll it back and we'll be done. The answer is absolutely not. They will not do it. Tell me, like, when has HUL rolled back on its prices? They have hardly ever done that, and they will not do it. Same is the rationale as to why Apple keeps on increasing its product prices with every single new version. Have you ever seen Apple decreasing its prices? That concept is called as price stickiness. Once a ceiling has been created, that ceiling will be hit easily. For example, the market ceiling right now is 18,600 and it will 100% hit that ceiling. It has never happened in the history of Nifty that the previous high has not been broken. So from that particular perspective, because the companies keep on raising the price year after year, especially using conditions like this, therefore the Nifty along with it also keeps on going up and up and up. Because ask yourself, what is Nifty made up of? It is made up of companies, right? Companies like HUL, companies like ITC, companies like Reliance, all that stuff, right? Now, if these companies keep on increasing their product prices, they will keep on getting more profits. As a result, these company prices will increase, and as a result, Nifty will also keep on going up. So that is the simple economic argument. That's one. Second is a more macroeconomic argument regarding high inflation. So you might have recently checked the numbers in the US that the US inflation is at a 40-45 year high. Such high inflation has never happened in the US. And I've been yelling at the top of my voice on this channel that, hey, you know what, for the last 6 months that, hey, we are hitting a high inflationary environment. We are hitting a high inflationary environment. Now that environment has started. So what does this mean? This simply means that cash now is pretty much useless. Now, why do I say it? I've given this example multiple times, but I'll give it again because people who are holding cash right now, you are taking a huge hit on your portfolio. So if you're keeping your money in savings account only, you are only making 2% rate of interest, and the inflation in the Indian economy is close to 7%. So in real terms, you are 100% losing 5 rupees every single year. So that is a problem that has started because of a high inflationary environment. Now the problem is that this high inflationary environment is going to continue for a substantial period of time as of now. So people have no other option but to keep on investing their money in assets. This is a very important concept. What are assets? Assets are stocks, real estate, cryptos. Cryptos again are a very important asset class. Now please don't drop off that, hey, Lord Voldemort currency, what are you talking about? This, that, only stocks are pure, everything else is impure. No, please be a sensible investor. Please understand the concept of asset classes. For example, you have stocks, you have cryptos, right? Cryptos are much smaller than stocks in terms of asset classes. You have bonds. Now the issue is that in a high inflationary environment, bonds also people don't buy. Especially now because the bond interest rates are very low to begin with. It's close to zero in terms of real returns. So people don't have an option of buying bonds. People have to either invest in stocks or cryptos or real estate. These are the three available options right now, whether we like it or not. Now, a side note here, a lot of people have been telling me that, hey, Akshat, we are not able to deposit INR in vault right now. So guys, basically the problem that has happened with all the crypto exchanges right now in India is that the banks are not supporting crypto exchanges in terms of making that transition process smoother. Vault and other companies are looking for reliable banking partners. It's not crypto exchanges' fault per se, and of course these type of things are going to happen to an asset class unless regulatory clearances come in. And this is one of the prime reasons why the crypto as an asset class is shrinking right now, because they are waiting for regulatory clearances. Then why do you suggest that we should take a look at cryptos? So guys, I just discussed whatever I'm doing in the market. Right now, am I buying cryptos? Absolutely yes, I'm buying because I believe in the crypto as an asset class. And if I'm buying these things at a troubled time, they are likely to give me good returns subsequently if the asset class survives. Now, does this mean that I'm selling my house and selling all my stocks and only investing in cryptos? No, I have never advocated that. I'm using crypto as an asset class where I'm making minority investments. For example, 10 to 20% of my portfolio is in cryptos and I will keep it that. So the central message that I want to give you is that when we hit that 25,000 mark on Nifty, it's not as if that other asset classes will not grow. Real estate will also grow, cryptos will also grow, and stock market also will grow with it. The only thing that will not grow is cash. Cash is going to get worse and worse as the inflation picks up, and this is only going to stay high for a substantial future. So you should get out of cash as an asset class and start investing in different asset classes that you feel comfortable taking positions in. Now let me also very quickly touch upon one central reason as to why we grow in the long term. The answer is fairly simple, that the world needs to grow. For example, will you work for your organization if your salary stays intact for the next 20 years? You are getting 30,000 and you continue to get 30,000 for the next 20 years. Will you work? You will feel very unhappy. You will probably leave the job after 2 years. Why? Because your salary needs to grow. Similarly, the world needs to grow. Things become more productive with time. And as a result, productive investments grow. So that's the reason why the stock markets have to grow in the long term. There is just no other reason as to why it will not grow. Now comes the interesting question that, okay, Akshat, great. Understand the argument that, hey, we will hit 25,000 Nifty, but can you tell us when is that going to happen? Is it going to happen in 2 years? Is it going to happen in 5 years? Is it going to happen in 10 years? Okay, so here is the very honest answer. Here is where we are, roughly at 18,000, right? So I genuinely see the markets behaving like this, right? So you'll go up, down, up, down, up, down, right? There will be a lot of sideways movement for the next 2 to 3 years. That is my understanding. Now, why will this play out? This is a very important concept to understand, because if you don't understand this concept, there is absolutely no way you will make money for the next 2-3 years. You will keep on doing only index investing and your index will hardly move, because you will buy it here, then after 2 years it will again come back to here only, right? And yeah, 2 years lost, no money made. So therefore now you should learn about individual stock investing, because now you need real skills in a sideways market. This is a sideways market, and now you will need real skills. So let me help you understand why this sideways movement is likely to happen. And again, if you want, I'll make a separate video on this. So number one thing is that there will be tapering, and there will be different rounds of tapering that will keep on happening. What is tapering? Tapering is the opposite of quantitative easing. Quantitative easing means that the Feds or the governments are pumping in a lot of money in the economy. As a result, more money printing, more inflation. Now, opposite of that is tapering, that the governments increase the bond rates, and as a result, more money flows into the bond market. So excess liquidity is withdrawn from the market, and this process is called as tapering. Now, in case you don't understand, don't fret about it. You simply need to understand that, you know what, something like tapering is going to happen. Tapering means interest rate increase. So if interest rates are increased, then the money will flow out of the stock market. Now, whenever that happens, the stock market comes down, right? Whenever Feds print more money, the stock markets generally go up. Now, why am I telling you all this story? Because this tapering is adjusted. No one knows how much to increase the interest rate. The governments monitor the inflation. They look at various things like unemployment rate in the economy, bunch of different things, which is beyond the scope of this video. But to cut the long story short, they will keep on tapering, and even they don't know how much tapering to do, right? So with every tapering decision, you will see this volatility in the stock market of going up and down, and we are likely to witness a 2-3 year sideways movement. So I would say that, hey, we are at 18,000. So in another 2 to 3 years, we will be somewhere around 25K, and after that there will be a massive breakout again, because you have seen this massive breakout happening here. Now this happened because of excess liquidity, right? Excess liquidity, right? Excess liquidity means that, hey, quantitative easing took place, excess liquidity happened in the market. Now this excess liquidity will be withdrawn. So now you would have a lot of unhappy people for the next 2-3 years in the stock market from that particular perspective. These are my estimates. I can be wrong, right? So just issuing a disclaimer there. If you push me that, hey, you tell me when the markets exactly are going to hit 25,000, 2.5-3 years, that is the time that I'm thinking. So which brings us to the next very interesting section, which is that what will happen to these Nifty 50 stocks in this 2-3 year time frame if the sideways movement happen. Should I buy like Reliance? Should I buy like HDFC Bank? Should I buy like this random company? What should I do? Tell me that. Okay. So let me take you through the Nifty 50 company list. So this is the list. For example, Reliance is there in Nifty 50 index, and it has 10.56% weight. So should you go and buy companies like Reliance right now? The answer is no. Because Reliance itself has pivoted its model. It has changed its model to geo platform, right? The kind of acquisition that Reliance is doing, it is doing majorly in tech. It is not doing it in oil and gas companies anymore. So from that particular perspective, I will avoid companies like Reliance. They have a very high weight in the index. Companies like Reliance will be managed by operators to bring the Nifty down from time to time. Is Reliance a very bad stock? I don't know. None of that stuff. All I'm simply saying is that I'm not going to invest, because my hypothesis is that a sideways moving market, these companies are not going to do well, right? So that's one. HDFC Bank is a solid bank. Banking has to grow. Even if the Nifty has to move from 18,000 to 21,000, banks have to show performance. They have already been underperforming. So I will definitely buy something like HDFC Bank. So let me circle it with green color. Okay. Now, what about Infosys? Now, I'm not too bullish on Indian service-oriented tech companies. People can have a different viewpoint. I'm just sharing what my viewpoint is. So I'm not taking position, but honestly, since I'm not an investor, I'm not following this space closely now. So I'm not giving a lot of commentary around it. In case something interesting happens, I will change my mind. So I'm putting an orange bar here, not the ice cream, by the way. Okay. So let me take you quickly through this list. Otherwise, this will become like a 5-hour long video. Okay. So ICICI Bank, I'm buying HDFC, I'm buying TCS, I'm not buying Kotak, I'm buying L&T, I will never buy. Hindustan Unilever, I'm going to buy a lot. ITC is fine, it's an average stock according to me. Bajaj Finance, I have already invested, as I showed you a few days back, and it has given 18% returns already. SBI, okay, let me not comment. Bharti Airtel, not buying at all. Axis Bank, yes. Asian Paints, yes. HCL, I'm not buying. Bajaj Finserv, it's similar, right? So I'm buying. So these are like top 2025. I have given a very quick commentary. Now, why have I done this? Why I'm not looking at other stocks, all that stuff? I will discuss in some other videos. But I want to quickly talk about the final section of this video as to what type of stocks am I buying and what are 6 categories of stocks I'm looking very closely at. Because when Nifty moves from 18,000 to 25,000, a lot of these companies that are listed in Nifty 50, they will come out. Okay, so it's not as if that these companies will stay intact. A lot of companies will go out of Nifty 50 and a lot of new companies might come into Nifty 50. Also, a lot of non-Nifty 50 companies will also grow because the index is also growing. So let me have a very quick conversation as to what 6 specific type and themes of companies I'm purchasing right now. Number 1, insurance. I definitely see this sector booming a lot in the next few years in a country like India with all the tectonic changes that are happening. So this becomes like a very profitable play. So I'm aggregating stocks in this. AMC, again, I'm very bullish. AMCs have come down quite a lot. Therefore, I'm quite bullish about the space because people have no other option, right? Think about it this way. Go back to point 1. In a high inflation environment, will you keep your money in cash? You will not. Any sensible person would not. And more people will realize this. What is their option? Either to learn about stock market themselves. Now, people generally are not that diligent or have the time to do it. So they just go and give their money to AMCs. So AMCs have to grow, no doubt about that, in my opinion. Small finance. As more and more entrepreneurship happen in tier 2, tier 3 cities, villages, small finance banks are going to grow like rocket, right? Housing is developing a lot in rural areas. Entrepreneurship culture is seeping into tier 2, tier 3 cities, villages. Small finance banks give these type of loans specifically. So I see some of the companies becoming like Bajaj Finance from this small finance bank industry. Then you have industrial growth. So these will be companies like Grindwell Norton. These will be companies like GMM Pfaudler, etc. Good industrial growth or capital goods companies are going to do fairly well. Now, organized pharma or healthcare sector is also going to do well. For example, companies like Dr. Lal Path Labs. Now, people have actually started spending money on getting their checks done. Now, we are not going to local dispensaries to get our reports. We are actually, spending more money by going to organizations like Dr. Lal Path Labs, etc. where testing can be done in slightly more reliable manner. Sixth and finally, I am quite bullish on specialty chemicals because specialty chemicals acts as a raw material fodder for a bunch of different industries, right from petrochemicals, pharma, industrial goods, bunch of different companies. Specialty chemicals provides a raw material and finance companies also provide a raw material for industry growth. So from this particular perspective, these are the 6 themes that I'm very bullish on and I'm investing quite heavily in it. So just a very quick summary that you will only make money in the stock market if you believe in a bullish narrative. Because markets either go sideways or become bullish, they rarely fall for a very long elongated period of time. So we have to remain bullish. That's one. Second, my hypothesis is that we are going to move to a sideways moving market for the next 2 to 3 years. So we are not going to hit that 25,000 mark very soon. I might be off. I hope I am, because if the market reaches 25k soon, then I make even more money from my investments. But that does not mean that you should not be investing. You should definitely invest. Finally, I discussed 6 themes plus cryptos, because crypto as an asset class will also grow as Nifty grows. So that is my analysis. I hope you enjoyed it. Consider giving it a like. It helps a lot, and I will see you tomorrow.